Welcome back, ladies and gentlemen. I hope you have a great time so far here at the Realty on Expo 2024. In the next sessions, our program, Breaking Down Barriers, the Rise of Tokenization in Real Estate. We will find out how tokenization in real estate work, the benefits, challenges, and how to sustain these in the long run. We are here with our moderator, Polis Xinaris, social media strategist and crypto educator at Pax Social Media, who will also introduce you to his panelists. My dear speakers, the floor is yours.
Thank you very much. Hello, everyone. Welcome. Today we have what I believe is a very interesting topic for you, and it's about the tokenization in the real estate. So you all know now about crypto and the Bitcoin adoption, blockchain technology, but what does all this mean today for you who want to raise capital, awareness, be on the front of technological development so you can make valuable connections and valuable projects for your investors and clients. Today with me, we have Christiana, Monica, and Alexis, and we're going to try and cover various aspects. And if we have adequate time, we'll take some questions because I'm sure that such a new topic, many of you will have questions. Or we can talk later on. So, ladies and gentlemen, thank you for being here with me today.
Thank you, too.
I will start with Monica. My first question is, we have already seen institutions and investors shifting their attention to crypto and digital assets as part of their portfolio. How does one make the shift in a compliant way and manage their portfolio with a peace of mind, taking into consideration that some of these people and wealthy people have absolutely no idea about crypto?
I think a general comment before I dive deeper is that we should never invest in something we don't have a good knowledge of. So this is a general consensus for all types of investment. It applies here as well. Now, the tokenization of real-world assets in general is a huge market, right? Just to give you an idea of how big it is, in 2021, this whole market, including the tokenization of items like gold or oil and real estate, was valued at around $2.3 billion. That was in 2021. It is expected that by 2030, this market will reach the value of $16 trillion. So we are talking about something that is growing exponentially, and it's something that is that seems to be here to stay. Now, for real estate assets in particular, the tokenization is a fundraising exercise, right? Why do we tokenize a real estate asset? In order to raise financing for a project. So if you are a construction company or a property developer, the traditional way to raise money or finances for your project is to reach out to pension funds, to institutional investors or banks, because the ticket size is usually quite big. So you're looking for a big amount of money in order to finance your project. It's usually an illiquid investment, and it's also an investment which requires a very long horizon. You invest in it and then you forget about it. Now, with tokenization, what you can do is break down, and my co-panelists here will dive deeper into the logistics of it and the technicalities. But basically, you break down an asset into smaller components, which, in terms of financing, enables you to reach out to a wider range of investors. So you can reach out to family offices, you can reach out to high net worth individuals with smaller ticket sizes. And at the same time, you can, this investment becomes more liquid. So it can be liquidated much easier if somebody wants out of their investment, and therefore the time horizon for the investment can become shorter if required. So it is something that is happening right now, and in the conversation later on, we can share some more details about the regulatory aspects. But what is happening is something that should be in the minds of property developers and construction companies, because it seems that it's growing at an exponential rate, and you wouldn't afford to stay out of this market.
Thank you very much. Alexis, coming to you. Let's say a business entity wants to follow the process of raising funds via crypto, develop a real estate project, tokenize it, get paid in crypto, okay? Because a lot of billionaires and millionaires have crypto that they want to invest somehow, but then they want to transfer those profits into fiat currency. Okay, a regular currency. So, is that possible with all the banking skepticism and the regulation we have?
Thank you, Polis. That's a fantastic question, but let's keep that towards the end of the conversation, because that's probably the putting the icing and the cherry on the cake. Let's start off by, first of all, and I will come back to that. I'm not avoiding that question, but I will come into that. First of all, if it was 5 years ago, I would not have even asked for this clarification, because it would have been certain that 100% of the audience would not know what blockchain is. I assume that a great percentage of the people in the audience now have an understanding and an idea of what a blockchain is. Blockchain is a chain of blocks, and these blocks are linked together through a hash function that is present in the block that follows, that relates to the previous block. This gives it certain advantages and makes it ideal for a certain number of use cases in a great number of industries. This gives, first of all, transparency and trust. Being able to have this immutable record of transactions. Why? Because in order to tamper a piece of information, it could be a document, it could be a financial transaction, it could be anything that is found within a block, you need to go to the final block of the chain, tamper all blocks consecutively until you get to the block where that information is stored, and do that at the same time, consecutively, whatever, on all copies of that ledger, of that blockchain, that are distributed around the globe. A task impossible, requiring billions in energy. That's why blockchain is considered as the most secure way of storing any kind of information. Now, this gives it certain advantages, and this is where we actually come to why is it ideal for asset tokenization. Other than the transparency and trust that it installs, which in effect helps in the execution of property transactions, other than the efficiency brings about. Why? Because we have the use of the so-called smart contracts. These are contracts that are written into code. Christiana might refer to those in a bit more detail later. And the cutting out of the middle party. At the end of the day, that's what blockchain came about to do, to cut out the middle party. This will be scary for some, but even in professions like mine, accounting effectively, or legal profession, a lot of people will be affected, and a lot of professionals will need to adapt in order to be able to have a future. So all these efficiencies are cutting out costs. You've got the security aspect, the strong cryptographic elements within the blockchain. Blockchain is not a single point of failure. That is any database. Any database we have in our companies or anywhere is a single point of failure. So having a distributed ledger that is actually found on a number of servers, let's call it that, installs search and trust. I will not take any more time on this, but I will come back to your point later on, where tokenization of assets is where blockchain comes in, and property sector being one of the prime examples of how actually this tokenization can be taken advantage of in the property industry.
Thank you very much. Now, coming to the legal aspects, Christiana, we have already seen companies tokenize real estate projects around the world, some very successfully, but it sounds scary for many of us. So they use that to raise capital and provide several benefits to their investors. While it's an exciting thing, what are the legal implications for someone pursuing this path in the European Union?
Thank you, Polis. Guys, it feels nice to be here with you today. Let's talk tokenization. First of all, what do you understand by this word, by this phrase, tokenization of real-life assets? So tokenization denotes a process because of the word "ization." Any word in English which ends "ization" shows some kind of process. So it is the process of taking something from the real world, coding it into a token on blockchains. So then we do have a digital asset. However, this is not just it. You need to have in mind that there are several different ways to refer to tokenization. So while it is a process of bringing an asset, digitalizing an asset on blockchains, at the same time, you need to think in the following way. How do I do it? Each time, we may use a different way to do it. So, for example, one way is fractionalizing the property itself. We break down the property to pieces, and then we take the fractions, and we tokenize the fractions. When I say tokenize the fractions, what do we actually do? We take the fraction, the one fraction, and we code it on a smart contract, which is usually called a token smart contract, which, by the way, later the regulator will audit. They will look into it, what it has in it. So we take the fraction and we tokenize it in this way. We use developers. We actually liaise with them in what exactly they need to do in order to tokenize properly the fraction. But that is one fraction. What else can we tokenize and then refer again to real estate tokenization? I may have a property, any kind of property, land, commercial property, any kind of building, hotels, anything you can imagine, even ships and yachts nowadays. And I may have the ownership of this real life asset on a company, any type of company. So in this case, what options I have, I may tokenize the shares of the company. Therefore, in this case, again, it is real estate tokenization because it is related to tokenizing shares of a company which owns an asset. So it is a kind of project again. So we may do it because we need the funds, as Monica said, and Alexis, we may need the funds to develop this property. But it's not just that. We may need the funds to go to a second property. We fund the first one to go to the second. That is one solution. We may want to tokenize the mortgage that we have at the bank with the bank, and we may raise funds to pay off the mortgage and then after we paid off the mortgage, then we may raise the funding without the bank in the middle, for example. So each time we tokenize, we need to have a plan. We need to have a business plan on what exactly do we do. Are we tokenizing a fraction of a property? Are we tokenizing shares of a company? What type of a company is this company? Are we tokenizing something else in a company? What else? Maybe it is a bond. Maybe we want to issue bonds and we tokenize the bonds because we want to raise funds. And maybe, why do we tokenize bonds? Because I don't want anybody to become owner. I just want the money and I will give them back the money. Therefore, I will give them interest on that money they give to me. What other ways? If I don't want to tokenize an instrument, which is a bond or a share, I may tokenize a debt. I ask you for money, you give me the money, I tokenize the debt, I give you back then the money. So this is a lending agreement. Also, this is a facility agreement. Can I tokenize real estate via tokenizing a facility agreement or a lending agreement? Yes, I can do that. In any case, whatever way I decide to tokenize, whatever legal solution I decide to use, of course it will have legal implications. Therefore, we need to see the relevant laws and regulations. So we talk later about that.
Yeah, we'll talk about a bit more about the implications. So as we understand, there are so many options now in the blockchain technology, safety, faster, it takes away a lot of burden and process from the traditional ways that we are still currently using. So limitless opportunities for everyone. So, Monica, in your experience helping businesses become more digital and tech-friendly, okay, what are the main things one needs to have in place before tokenizing a real estate? Because a company may not be so technologically advanced with its processes, its systems. What are the things we need to take care of?
Two main ingredients, a strategy, and let the grown-ups handle it. And by grown-ups, I mean the experts, legal experts, auditors, consultants. And just to add on what Christiana was saying, tokenizing a real-world asset is like crowdfunding on steroids. Because you allow people to get, it's like a building built with Lego, and then you give one Lego piece to each owner. But I believe that it's because most people know blockchain because of Bitcoin. They understand crypto now, but not so much tokenization. And I have to say that tokenization is a little bit more complicated than exchanging crypto. Because if I send 1 Bitcoin to you, or half, or 1 million of Bitcoin to you, and you lose your key, then it's your issue, your problem, I don't care. But if I tokenize my real estate asset and you lose your key because you bought a part of it, that's a problem that I have to deal with as well, because I have to give you a key. I cannot leave you without it. So strategy, going back to your question, strategy is very important. And by strategy, I mean understanding why you are tokenizing something. What do you want to achieve? What are the implications? And then the second thing, and that's why I said let the grown-ups handle it, grown-ups in quotation marks, right? Don't come for me afterwards. This activity is regulated, right? In Cyprus, it's regulated by the Cyprus Securities and Exchange Commission. And there are 3 things a regulator will never sacrifice. 1, investor protection. 2nd, anti-money laundering frameworks. And 3rd, KYC. So there is a lot of back office work that needs to be done in order to proceed. Before proceeding, you need to do all the groundwork in order to be able to proceed.
Thank you very much. And coming to a very important question for Alexis. Okay, raising funds. So when we talk about tokenization in real estate, can you explain what are the benefits of doing that as an industry in Cyprus? And how can we benefit from pursuing it as a differentiating factor? And do you believe we can access more funds for the businesses in the real estate in Cyprus?
Sure. Okay, I'll tell you the experience we had for the last year that we launched the FuturEstate Alliance. First of all, yes, you do it for liquidity reasons, in order to be able to draw funds from an audience that is not your usual investor. My cousin, myself, that have 500 euros sitting in a bank, 1,000, 10,000, 50,000, but it's not enough to give me access to the property market, given the prices out there. However, I want to participate in the property market, and it's not just the property market. Okay, obviously, this is a property event, but tokenization is, and we're living in now as FuturEstate Alliance. For certain reasons, the Cyprus market is not ready to embrace it yet, and I'll explain why. Most of the property sales are done on papers in Cyprus. So most of the developers draw the funds they require to start the investment and continue and finish it by selling by pre-sales. So they don't really have as much need for it. This will not always be the case. Also, there's a hindering factor, and this is from our last year's experience, in that most of the costs to do with tokenization have to be paid up front, whether it's the legal costs for the drafting of the agreements, between the token buyer and the property owner, the filings with the various authorities, whether it's CISEC or any other authorities, wherever you're going to be selling your token, the business assessment, the business proposal assessment that would be necessary for the investor to check out before they proceed with their investor, or the marketing expenses. You've got to get your token out there. So all this is taking place up front, so a lot of the costs are up front. And because it's something new for people. I think it was the same case with funds. When people didn't realize the benefits of having a fund and investing and paying up front for the cost of a fund, it's more or less the same in that you're paying for something, but you're not 100% sure that you're going to get the money. As we move along, and we've seen other industries being more receptive to tokenization, and I'm talking about the renewable sector. We are currently running 2 projects, wind energy projects on the platform, on the FuturEstate Alliance platform. Why? Because that sector is finding it more useful to draw funds using tokenization than the property sector is, especially in Cyprus. A lot of the developers in here will know that they sell their buildings on the plans before they even actually start putting a brick on the ground. As you asked about benefits of tokenization, yes, it gives you access to a pool of wealth, crypto namely, that is by all means kosher, by all means KYC'd, by all means legit. I say to people that the worst thing that happened to crypto is its name. We associate crypto with something hidden, something secret. There's nothing secret and there's nothing hidden about crypto. It's all traceable from the moment it was mined to whichever wallet it rests at the time you engage with it. Inclusivity, it gives people benefits, it gives people access to the property sector, to the renewable sector. By all means, sexy industries return-wise. But a lot of people simply don't have the funds to go all in and fund a project outright. So fractionalizing, breaking a project into smaller parts gives you access. Buying a Lego, as Monica said, is still attractive for people that wish to get into those sectors.
And just to add something, Alexis said the word crypto, dodgy is a little bit, but it's nothing hidden here. As he said, it's transparent. But why it is called crypto? Do you know? Do you know? Cryptography. It is because blockchain works with cryptography, there is science, and when we code anything on blockchains, we use cryptography. Therefore, that is why they call them cryptocurrencies, crypto assets.
Nothing to be afraid of by the word. A short comment is that a few months ago, a friend of mine being on the real estate business told me, you know, I have somebody who has around 300 million euros to invest in the real estate, and I can't sell them anything because I don't have clients that accept crypto. Okay, so I think being ready for it is very important, because otherwise we are losing ground on what's happening around us.
Yes, this goes back to your initial comment that I just skipped and I was going to readdress. This was once upon a time. Traditional banks, high street banks as they're called, they find an excuse that the Central Bank of Cyprus prohibits them from accepting crypto. This is not the case. The Central Bank of Cyprus is kind of sitting on the fence, but there are solutions in the market. We have used on a number of occasions solutions, even locally, with locally licensed financial institutions, where you can actually accept the crypto as a payment and convert it into fiat and actually pay for your suppliers, whether it's your builders, your painters, your kitchen fitters or whatever. So there is solutions out there in the market, and you know, all people have to do is ask.
Excellent, excellent. Let's see them in a while.
The way the tokenization works, the way our platform works, we have linked to a licensed institution, financial institution based in the UK, where they accept the crypto and they accept the fiat simultaneously. They convert the crypto into fiat into their environment. They hold it in escrow until the project is complete. And once the project is complete, they release the funds into the account of the project owner in their own environment, where they can actually effect the payments.
Excellent. So, Christiana, as time is running, we have to move fast. And I want your lights on following what we just said. The traditional institutions in Cyprus don't facilitate crypto-related projects easily. So,
I mean banks.
Yeah. So talking about digital assets and distributed ledger technology and all that, are we talking about the same thing? And what is the role of MiCA, the directive from the EU that is, you know, laying the ground? What opportunities are arising from that?
I'll take it from where I left it. So when we code tokens, we code different legal situations, relationships, agreements of different types. In each case, the tokens may be regulated by different regulatory frameworks. For example, if I fractionalize a property and I code the fraction, imagine that. I code that piece there, that piece, that one piece, the other piece. Then you could easily claim that this is an NFT because it is unique. I fractionalize only that specific piece. NFTs are not regulated currently. There is no regulated framework for NFTs anywhere in Europe, for example. If I tokenize a share of a company, I tokenize a recognized, traditional, recognized financial instrument. Is this going to be treated in the same way as an NFT? Of course not. This will be regulated by the securities laws, prospectus laws, transparency laws, market abuse laws. Therefore, this is a different regulatory treatment. If I now tokenize property using utility tokens for a number of tokens, then this is a different regulatory framework. And because you mentioned MiCA, actually, MiCA, Markets in Crypto Assets Regulation, guys, it has very little to do with real estate tokenization. You know why? Because MiCA talks about stable coins and cryptocurrencies. Do you see any cryptocurrency when we tokenize real estate? Is this a cryptocurrency? You may pay with a cryptocurrency, yes, fair enough. You may pay with that. But in the token you buy, do you see any cryptocurrency? Therefore, you need to ask the question, what is in the token? Depending on what is in the token, we choose a specific standard token smart contract to code it, because the regulator will audit it. Therefore, the regulator knows if this one is an ERC20, if this one is an ERC721, if whatever, many different standard and non-standard smart contracts which we use to produce tokens. So each time we may use a general word tokenization, but we need to understand that we produce different types of tokens each time, depending on the business plan we have. Therefore, you need to ask yourself, what do I need with this property? Maybe I need something different with the other one. Maybe I need something different with energy. I need something different with this hotel. So you need to ask yourselves what is the plan you have in mind, and then you need to develop the plan. You do the so-called tokenomics, and you decide at the end of the day what you give to the investor. Are you giving out ownership? Are you selling your company? Do you just want to raise funds via tokens? Bonds. Is there a bond in your token? Therefore, you will deal with the investors 2, 3 years, 5 years. You will then give them their profit, their interest, whatever, and they will go. They will leave. But anyways, I want to say that MiCAR only regulates payment tokens. And usually real estate tokens are not payment tokens, they are security tokens. So MiCAR regulates payment tokens, and MiCAR provides for 3 separate kind of categories or classes. It separates, it differentiates between 3. The one is the asset reference token. It is when I issue a stable coin and I back this stable coin. I peg this stable coin to some basket of assets. It needs to be like a commodity and an official currency, 2 official currencies, more than 1 commodity. When we say commodity like gold, silver, when you issue a payment token and it is backed by some value, which is somewhere protected, because this is what the regulator wants, then this is called an asset reference token, which is, in abbreviation, is called an ART. Then the second one that MiCAR provides for is the AMT. This is the electronic money token. Whenever your basket of assets to which you have pegged the stable coin has only 1 official currency, just only 1, then this is an EMT. This is an electronic money token. So we have the asset reference token, many assets in the basket. We have the EMT, only 1 official currency in the basket. These 2 are stable coins because they are pegged. The first one with different assets, the second one with 1 official currency. And we have a 3rd category. The 3rd category are other payment tokens and utility tokens. Other. Which are the other? Those which are non-stable. Since we have stable in the first category with more than 1 asset, stable in the second category with only 1 official currency, in the 3rd category we have the non-stable cryptocurrencies. They are not pegged anywhere. They are the normal cryptocurrencies that we know. This is MiCAR. Do you see anything related to real estate and anything related to security tokens with MiCAR or MiCAR? No. The only thing maybe, and when I started replying the question I said, it has little to do. Why did I say little? Because there is one aspect of MiCAR which may be used for real estate or energy projects and some other projects. And this is when you actually issue utility tokens. But usually in these projects, you need to have a core token, and the utility token is just tied for some motivational reasons Like if you are a hotel, you may want to give your clients utility tokens, because utility token is a token used in a community to motivate your community, your people, your crowd. You need to motivate it via the token. Therefore, MICA, in my opinion, has little, as I said, to do with the real estate tokenization. Real estate tokenization, energy tokenization, actually, in this case, involves tokenization of security tokens, okay?
Thank you very much for clarifying the field. Monica, what are the main traps one should avoid when transforming a traditional real estate business? Because all the ladies and gentlemen here might have this question, okay? What to avoid?
I will answer briefly because I am mindful of the time as well. First of all, this activity is not for everybody. So, as Alexis said, we are lacking maturity in Cyprus and in Europe, I would say. We still have a big hill to climb in terms of massive adoption, so we're not quite there yet. And we need to understand a lot of things. And based on what Christiana said, education should be the focal point of somebody who is looking to carry out such activity. But I have been around long enough to know that technology is evolving fast. And as with all technology mega trends, we need to not ignore them. We need to be mindful of where they are heading and try to understand them. And a common message in all the 20 plus years I have been working is don't ignore technology, or as we say, innovate or die. So we need to have this at the back of our heads. The need for tokenization of real estate is there because of the liquidity aspects, the fundraising aspects. I understand that many property developers and construction companies are mindful as to how they are going to raise money, so clearly the need is there. Then demand, on the other side, from investors, I believe, is there as well. Many retail investors are looking to invest in real estate, but because of the big ticket size that I mentioned at the beginning, are not able to, or because of regulation. And also, the current macroeconomic environment and fiat instability at the moment is helping to push towards the direction of tokenization, I believe. So, yes, in a nutshell, I would say that one should be mindful, understand, educate themselves, build up a strategy, action plan that has a solid basis, and also be mindful of the regulation, of the regulatory framework.
Excellent, thank you very much. Alexis, coming to your final remark, we talk about the benefits, we talked about the security, the distributed ledger, blockchain technology. Tell us a bit more about those benefits and the funding process you promised.
The benefits we've discussed extensively. I mean, it's inclusivity. It is a new modern way of actually getting access to any type of investment. And just as a final remark, I think the acronym RWA, real world asset tokenization, would become very synonymous with any kind of an investment in the future, whether it's a financial product, and we all see the tokenization of the Bitcoin ETFs. That's a type of a tokenization. And we see, following the press, for us that we are in this business, increasingly we see reference to such products being out there in the market. The renewable I mentioned, the financial products are definitely topping, and of course the real estate will also be up there. But being able to have access to the pool of wealth of crypto that actually are out there, all these people wanting to bring these assets that they have created legitimately into real world assets, is a massive opportunity for any person launching any type of a project, and it shouldn't be ignored whether you're in real estate or any other market looking for investors.
Thank you very much. A good point, an opportunity not to be missed, and I think we have the opportunity in Cyprus with all of this knowledge and expertise to be on the forefront of what's going on. And a final comment, just a few seconds from Christiana, to tell us, with all those scams taking place in the crypto world, what's one piece of advice to help investors to be on the right side?
They always need to be very careful with what they invest in, the platforms that they use, especially those platforms calling themselves DeFi, and they are not D. They may be Fi, but not D, because D means decentralized, and most of them are not. So it depends on the governance of the platform, and they will find themselves at some point in regulatory complications, and if they have lots of money in these DeFi platforms, this is an issue. But regarding real estate tokenization, you need to do due diligence, you need to seek professional advice always, you need to do your research. You can come to us or any other experts, and then you go and you do your research alone, and you can come back again and ask for more details and everything. We tend to train and regulate people a lot. So we do this every day because it is a new area. So we are used to share with people what they have to research into, you know. So this is it. You need to be very, very careful with the regulations. And have in mind that in each country you operate, you may need to deal with different regulations. For example, when we go, so with Alexis, the FuturEstate Alliance, when we offer tokens in 3 or 4 countries, different countries, we approach each and every regulator of each and every country, preparing the documents that each and every regulator of each and every country need. Because I'm offering the tokens in their country, and I have to respect their laws and regulations and everything. And above all, of course, I have to respect my client, because my client needs to be compliant wherever they offer their tokens. They are looking to raise funds, to develop their project. They need to be safeguarded. They need to be protected. Thank you.
Education, 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 and trust the experts. Well, we came to an end. I feel like that we could took a lot more time to talk about these very interesting topics. Unfortunately, we don't have time for questions, but we will be available for everyone who wants to learn more.
And if they have questions, feel free.
They know how to reach you. So thank you very much for being here today. We need to respect the next discussion as well. Ladies and gentlemen, thank you very much for being here.
Thank you.